Hi, Eugene.
Hi, Vera.
How are you?
Fine.
Okay, so can you start by telling our audience a bit about yourself and your journey into the world of crypto and Web3?
Yes, sure. I'm Eugene, the co-founder and managing partner at EarnPark with a background in engineering and marketing with over a decade in tech and digital companies. My journey into blockchain began in 2017, leading me to invest and explore crypto due to its promise of transparency, accessibility, and direct profit distribution. Despite the challenges in the crypto space, such as misinformation, fraud, we are committed to providing reliable information through our blog and Twitter Spaces, and obviously our YouTube channel. This is how we created EarnPark, a platform that gives everyone the opportunity to build their own crypto wealth.
Okay, thank you. So let's talk about Bitcoin. Could you tell me what fundamental factors have contributed to Bitcoin's growth leading up to 2024?
Thank you for your question. First of all, Bitcoin isn't a bubble or some pyramid scheme. It's a revolution. Bitcoin is a digital currency issued by community intelligence through crowdsourcing and protected by algorithms that guarantees complete independence from centralized regulators. Simply put, it's the new gold, digital gold. It has limited supply, it's difficult to mine, and it's deflationary by nature. I'm not just saying this to end this, to close the subject once and for all, and to say I've been right when I talked about it before. Bitcoin and crypto are only starting, and we have decades of growth ahead. Second, the next BTC halving in April will cut inflation and consequently emission in half, which means that 450 BTC will be mined every day instead of the current 900 Bitcoin. And the third reason is the development of BTC Layer 2 and smart contracts. This narrative involves the development of BTC as comprehensive Layer 2 for DeFi with its own staking, liquidity provision, and elaborate strategies.
So, Eugene, how did the market react to the launch of the Bitcoin ETF? Did we see an immediate impact on Bitcoin price or investment sentiment?
Thank you. Good one. According to BitMEX's search at the beginning of February, the net inflows of Bitcoin ETFs were more than $400 million, which is the equivalent of more than 19 days worth of mining rewards for miners. Current numbers have to be verified. Yes, the net inflows can change, but something tells me that the systematic approval for Bitcoin ETF and the most popular social media around the world will bring in even more investments. And as a result, the BTC lockup as the Bitcoin itself backs the Bitcoin ETF in a 1-to-1 ratio. So Bitcoin ETFs made using Bitcoin for regular investing accounts much easier and removed the need for actually studying crypto. This is very important as it means that more people will be able to invest in Bitcoin, which will potentially lead to less volatility and will boost confidence in Bitcoin among the traditional finance world. Now we're seeing colossal growth, and I can say it will continue short term or keep growing or everything just goes to zero, but I think it's all going to be fine.
Thank you, Eugene. So, what were some of the key predictions made by analysts regarding the Bitcoin ETF launch, and were these predictions accurate?
Yes, it attracted significant attention and investments drove nearly $2 billion in the first 3 days of trading. This shows that people are seriously interested in investing in Bitcoin through a more traditional route, which is great for bringing Bitcoin closer to the mainstream. But even with this excitement, the massive influx of investment didn't quite hit the sky-high expectations some had. Analysts had mixed feelings about what to expect. Some were really upbeat, thinking this could kick off a new rally for Bitcoin, drawing in their money. They pointed to the trillion managed by institutional investors worldwide, suggesting even a tiny slice of the pie could mean big things for Bitcoin, especially with the Bitcoin halving on the horizon, hinting at an optimistic outlook.
Okay, thank you. So, how has investor behavior shifted since the launch? Are we seeing more institutional investors entering the market?
With the launch of Bitcoin ETFs, the reaction from investors, the market has been quite positive. The introduction of these ETFs by big names like Arca Investments, BlackRock, and Fidelity on major exchanges such as Nasdaq and NICE has been a game changer. There are also big players who look at it as a tool for fixing an asset. Those who have been accumulating Bitcoin for years need liquidity to sell it to you also. That's it.
Okay, thank you. So, what's the future outlook for Bitcoin ETFs, and are there going to be more cryptocurrency ETFs?
Looking ahead, the buzz around Bitcoin ETFs is real, and the experts are pretty optimistic about what's next. Picture this a world where Bitcoin ETFs aren't just a niche, but a mainstream staple. Regarding other crypto ETFs, the SEC has postponed any verdicts on the approval of an Ethereum ETF, and currently JP Morgan estimates the likelihood of it being approved in May at under 50%, but that doesn't mean it won't happen. Have I answered your question?
Yeah, you have actually. So, what are the long-term implications of the Bitcoin ETFs on Bitcoin price, market stability, and the overall crypto ecosystem?
Mm, If you look at gold after the approval of Bitcoin ETF, the price of gold went down, then entered the growth phase. I think we can expect the same from Bitcoin, and basically the current growth supports this theory. In my opinion, progress is inevitable. The system is moving to the configuration that is most desirable of its participants. If everyone wants to be happy and rich, then we will get there. It's just a matter of time. If we don't kill each other, but this scenario is pointless even to consider. So the market has been growing for the last hundreds of years. Individual companies can decline, but the key is to get the growing industry. I choose the industry of digital money, and the most patient players will win as usual. I believe that human economy will grow, which means the computing power will grow, which means the value of Bitcoin will grow. Do you agree with me?
Yes, I do. Not only because you're my boss, but in general, also I do agree with you. Okay, so just a few more questions. Eugene, could you please tell me how does Bitcoin fit into a diversified investment portfolio in the current financial landscape?
I'm glad you asked. It's a professional question. Adding Bitcoin to a traditional portfolio, for example, 60% stocks, 40 bonds, significantly increases the portfolio volatility. Even a small allocation to Bitcoin can meaningfully amplify potential gains and risks. For example, replacing just 1% of stocks or bonds with Bitcoin could contribute around 3% to the portfolio overall volatility. Increasing this allocation to 5% could see Bitcoin contributing to 20% of portfolio volatility, underscoring the exponential rise and risk is higher Bitcoin allocation. But in the current market, I believe that the biggest risk is not taking any risk. In other words, sticking to traditional investment principle is risky for capital in a world where political and economic landscapes could change in the blink of an eye.
Yes, I definitely agree. Okay, thank you. What are some bold predictions for Bitcoin's price and technological advancements over the next 5 years?
Some experts are placing their bets on Bitcoin, hitting eye-popping figures such as $250,000 or even the elusive $1 million mark, especially around the bust of its next halving. Then you've got industry visionaries like Arca Invest's Katie Wood and former BitMEX CEO Arthur Hayes, who see Bitcoin not just as a digital asset, but as a revolutionary financial instrument, one that could redefine value storage in our increasingly digital age. Their bold goals for Bitcoin to reach $1 billion spotlight its potential as a hedge against inflation and the beacon of financial autonomy. So, regulatory change, tech advancements, and the global economic climate all contribute to this complex ecosystem. For anyone looking to dive into Bitcoin, a mix of excitement and caution is the name of the game. By the way, always do your homework and remember the crypto world is as dynamic as it gets.
Okay, thank you. Is Bitcoin going to 0 or to 1 million?
Good question. And actually, I don't know. And it actually doesn't matter. I don't think there is a price that will make me sell all my Bitcoins. Crypto is just the tip of digital iceberg that will change the world economy. The share of intellectual labor in total world turnover grows. So does the number of freelancers, people outside of organizations who are willing to do mechanical tasks cheaper and more efficiently. And traditional banking is not meant to cater to the pyramid of independent specialists scattered all over the world. And I'm not even talking about the huge number of robots and AI agents that will join the market. And the transactions through a bank cost around $10 to $20 on average. And it doesn't make sense if you want to send $1, for example. A few $1 billion a year are paid as transaction fees between people in the world. And a bank account transaction cost around 2-3% of the transaction value. And what would happen to this system is a need to conduct billions of transactions, each worth around 1 cent. So crypto and Web3 tech have emerged to lower transaction costs in the economy and improve the financial system. As for the Bitcoin price, let's wait and see.
Okay, thank you. So these are actually all questions I wanted to ask you today. So thank you for joining me. Thank you for answering my questions. So that's it for me. So thanks. Goodbye.
Bye bye.